oil prices have jumped to their highest in years after OPEC Plus abandoned talks to discuss lifting output. WTI hit its 2014 peak earlier, while Brent crude oil prices rallied to above $77 a barrel, now coming down slightly. It is the highest in 3 years. Well, the price surge is adding to concerns that inflationary pressures may derail a global economic recovery. Following the breakdown in talks, Saudi Arabia raised August oil prices in Asia, its main market. Saudi Aramco is said to have increased the official selling price for crude benchmark by 80 cents a barrel to $2.70. That's a hike of more than 40%, the biggest monthly rise since January. It suggests the oil giant won't raise supply next month, even as it sees the market tightening. Yesterday, OPEC Plus talks were cancelled after a clash between top producers Saudi Arabia and the United Arab Emirates. Saudi Arabia wants to maintain output curbs, while the UAE is pushing for higher production. The alliance failed to reach a deal twice last week. No date has been set for the next meeting, which has left oil markets in limbo. Well, Vandana Hari from Vanda Insights joins us now. Well, Vandana, what is the impact of current high oil prices on Asia?
Hi, good evening, Elizabeth. It's causing grave concern, certainly in this region, but I would say globally. We've seen crude prices surge by 50% in the first 6 months of this year alone, and sitting at more than 2-year highs. You know, it's in an environment of inflation and fear, and the fears in turn that inflation is causing globally. You have oil prices obviously burning a bigger hole in the consumer's pocket at the pump. But the other thing about oil prices that's important to understand is that it flows through into the price of a variety of goods, and directly through like petrochemicals and plastics and so on that we use, as well as raising the transportation costs of all the goods. So at this time, when governments are having to do the balancing act between inflation and keeping the easy money flowing for economic recovery, it's a major headache.
Let's take a look at the different scenarios. So if the talks resume, or say if the impasse continues, how do you think oil prices will move?
Yeah, so this OPEC deadlock has the market in quite a lot of confusion. So just to kind of put that in context, OPEC is wanting to put an additional 400,000 barrels per day every month between August and December into the market. Now, all the consumer countries and, well, the global community is asking OPEC to please go ahead and do that because, they feel the market is quite tight. And what has prevented a deal from going through is the OPEC member UAE saying that they are agreeable to raising production, but they would want their quota to be increased. And, that's within OPEC, it's like 23 member countries. That's could be like opening a Pandora's box. If one country asks for an exemption or an exception, then other countries might follow as well. So that has created a bit of tension, especially between the UAE and the de facto OPEC leader, Saudi Arabia. Right now, as things stand today, it's all in a limbo. We don't know what's going to happen, but I imagine quite a bit of behind the scenes negotiations would be ongoing between the UAE and Saudi Arabia. I do believe personally, my base case is that they will find a way out of it. It's the chasm between the two is not that wide that it can't be bridged. So they just need to compromise a little bit. I think it is in the interest of the global community that OPEC finds a way out of this because, markets do need to continue to be balanced. Otherwise, it's going to be quite harmful for the economic recovery.
Yeah, some optimism from you there, but there are also concerns that a potential collapse of OPEC is on the cards. How is that going to affect the global oil market then?
So that is a tail risk. And I think what happened back in March 2022 is still fresh in a lot of people's memory. If we recall, at that time it was Saudi Arabia and Russia, they couldn't see eye to eye on how to proceed with the production cuts in light of COVID and demand destruction. This time the problem is actually the opposite. So the last time the market reacted to OPEC's deal, OPEC, non-OPEC deal collapsing and everybody just flooding the market with oil, last April, at the time demand was down, so prices crashed. Right now, the market is reacting the opposite because, what is the lack of a deal is holding up more oil that the market needs. That's why we've seen prices going up. I do not, again, personally, that is not my base case scenario. It's, of course, there's always a tail risk that maybe the UAE ends up leaving OPEC, or maybe the deal ends up collapsing all over again. But again, that's not my base case.
Great, thank you so much. Vandana Hari from Vanda Insights.